Overnight, world financial markets continued to mull over the dual impacts of worse than expected US employment data coupled with the election results out of Greece and France. Those election results are important on the basis that in some quarters there are fears that they signal the turning away from austerity measures which actually underpin the whole bailout fund for debt-racked European governments. Investors, however, seem to be relatively unfazed overnight. Effectively, the view must be that those European governments are tied into the austerity measures and have very little wriggle room to get out of them. Oil, however, did respond. Brent crude for delivery in June fell through the $97 barrier. Looking at equity markets, the Dow was off again slightly, down around 30 points. However, the wave of pessimism from the weekend washed through local markets, with the Aussie market down around 95 points and the Kiwi down 10. Surprisingly, most European markets actually regained some ground, most of them being up by more than 1%. In terms of currency, the Kiwi was relatively flat. It was down slightly against the US, but is still hovering at that 79.5 US cent mark. Data issued by the Department of Statistics last week confirmed what we're seeing in terms of trends from the global dairy trade platform auctions over the last quarter. The statistics show that for the March quarter, the quarter ended 31 March 2012, dairy exports were up around 3.8%. However, in terms of value, they were down 6.3%, or around $194 million. When you actually dig into those quarter numbers though, some interesting things come out. In terms of the actual total exports for the quarter ended 31 March 2012, around 645,000 tonnes of dairy products were exported. This compares with the equivalent quarter in 2011 of 607,000 tonnes. Now the interesting thing is that most of that differential actually occurred in the month of January. And in fact, if you actually have a look at February and March, you'll see that for 2012, export volumes actually end up ultimately under the same level that they were in 2011. One other thing is quite interesting. Since September, dairy production has been up around 10% month on month. Given that the export quantities are up by around 3.8%, there is a question in terms of where that extra dairy production is going. The Department of Statistics has opined that most of it is due to the fact of the ports of Auckland closure. However, one other possible explanation is there, and that is that there's some degree of smoothing of supply in the face of those lower GDT platform auction prices.